Carlos, let's start with you.
Do you like Cathie Woods again now?
I love Cathie Woods.
Oh
right
man!
now.
Did you see what I wrote when I retweeted your thing? I was like,
"What did you say?
Palantir confirmation bias party starting in 30 minutes."
Bro, I love it. She's like, yeah, AI, revolutionary, Palantir, all the. I'm like, I love it. It's great. It's amazing.
Right?
I'm so happy about her.
But it didn't break. Oh, it broke $10.
It broke 10. Yeah, it ended at 10. And you're up on your position, right?
I'm up. It's one of the few that's green because I just keep buying all my other stuff. But
Mario, your bet is wrong. I bet
my wife is the net beneficiary of. This morning I told her, I was like, babe, let's sell some Palantir and buy some bags. She's like, no, you can sell everything else, but you're not touching my Palantir. I was like,
why is she real? She's a what?
She actually listens to Palantir Weekly. KRIS just talks.
Yeah.
She listens, and so she gets it.
She's actually a Palantir bull more than I am. Like I have some Palantir now versus I spoke about it, but like nothing that I had before. She's the one that's got the Palantir right now, bro. She's making money on Palantir. I'm just making a few bucks here and there on some bank stocks, but she's doing well. Yeah.
Look, if it goes back down under 10 or whatever, I'll ride it up. But I will sell that. Like if Enphase hits 140, it's gone. If Tesla hits anywhere near 100, sorry, it's gone. Like or Bitcoin, whatever. There's a million reasons why I would just sell it. But
I want to bring up something that I was actually really proud of one of our viewers. Like this guy Live and Let Go. I don't know if you guys know him. He usually he's on our Twitter. So he did really well on his position with SMCI. Like we were speaking about it. He bought into it. Was it SMCI? I think he bought something else.
It was SMCI. It was that one.
It might have been SMCI, but he bought something. And he was up on a really large position for it. And he actually messaged me today. He sold a portion of it and just bought the QQQ. And I am so happy that people do that, where when you have a winner, like, when there's time to be opportunistic, people take the opportunity to get in. But then when there is time to just, what, I have done really well. Let me take some money off the top of and put it into some index fund that I know that I don't have to worry about. That's like the house's money. And that was such a smart move on his part. Even if SMCI goes to like 300, I don't give a shit. I think that was a smarter move. And I think I am like, I do that typically too. Like I rotate every 10 years, but like right now I see opportunities in the market. So I'm buying individual companies, but I think eventually when we start to get back to a new normal again, I'm likely to sell a good portion of my portfolio and go back into the index funds, and I'm not talking about like the leverage funds, like the triple Qs or the TQQQs. I'm talking about either just QQQQ or VU, and just stick to those, because I think one of the big mistakes that we all make is we get caught in this euphoria of things will always be good like this all the time. I'm going to do this, do that. And then it's like, then
2021 hits.
Yep, exactly.
VITALY and I talked about that a lot too, that you have a lot more opportunities to practice your buying than you do your selling. And selling, especially when you're up a lot, is an incredibly emotional thing. And you're not prepared for that, because most of the time you're buying companies, they're in the toilet, right? They're shit. You're kind of depressed. You're kind of down. You feel like you're throwing your money down the toilet. But when it's high, you get this, man, it's a rush, when you're looking at a massive number and you're like, I'm about to sell this. And but sometimes you guess wrong. You get greedy.
And I think the key is not to sell your entire position, but sell a portion of it. You know what I mean? Like if you're up so much, you've done really well. Yeah. You can let most of the money ride, but just take a few off the top and put it into something that's like, just like it's your what's the word? It's your base. It's like your safe haven.
Or, for me, a lot of what triggers the sells is like, I put solar in my house in 2019, and I'm looking at the bill every month, and I'm like, it's a manageable bill. It was like a reasonable interest rate, but I'm like, if I can just get rid of this, let's just get rid of it, right? And like a car loan my wife had, we had a Nissan Leaf for a while. I was like, let's just get rid of it and not have that monthly bill. And it feels great. Or you have some debt that you've incurred. It just feels great to just be free of that.
Yeah, yep. I agree. And that speaks to this comment. AMIT, what level would Palantir need to hit for you to sell?
$750 a share.
But it speaks to what KRIS said, like to be reasonable. If Palantir hits 50 tomorrow, I'm out of everything because it's unreasonable, right? Whereas if it hits 50 in 5 years, then I'm like, all right, it's been 5 years, it's 50. Yeah. Let's see if it gets to 100. So I think that's what KRIS's point is about, knowing when to sell and putting it into something safe, like a dividend.
Yeah, and once again, it's not that you have to sell the entire position, right? It's just taking a little bit off the top. So like a good example of this, and I think this is a good thing to talk about, is Nvidia, right? Like I'm sure a lot of people did really well on Nvidia over the last like 90, maybe 180 days. The AI revolution is there. You know, they're if you're up exceptionally well on Nvidia, you don't have to fucking sell the entire position, but take a little bit off the top, put it away into a nice index fund. This way, you know what? If things go down, you're still like, you know what? I made a good move. I'm smart. And if things go up, it's like, yeah, you know what? I didn't capture 100% of the upside, but I also didn't risk the money on the house that I worked really hard for to get to a point where we are where we are.
So let's spend like 5 minutes on Palantir, then we'll move to Nvidia. Chris, why do you think Cathie is buying again?
I think with gap profitability, there is better chance for the growth story to materialize now. And I hate to say this, but I think a lot of the ARK funds are very like they're clout chasing. You know, like when the clout is on a company, they usually go into it and they follow and then they buy up a lot. And then when the clout is starting to die down, they sell out. I don't know. I just their methodology for investments, it's just weird. Like right now, they sold Shopify. Like, you know, on one hand, you're like, oh, we buy companies for 5 years, but you don't do that. You're not holding these companies for 5 years.
I think that this is what I think. She has a 5-year time horizon, but it doesn't mean every stock she buys, I'm going to hold it for 5 years. I think that's the difference. People give her a lot of shit for that. But if she were to say, I'm going to put this many millions of dollars in this stock and hold it for 5 years, that allows other people that are investing in the stock or that have intentions against her to affect her. So I think she still has a responsibility to show some sort of profits on a quarterly basis. And she also needs people to continue to bring money into the fund. So I don't think there's anything wrong with that. Like, I don't think she's doing it in her personal portfolio. You think she's selling Tesla shares in her personal portfolio? I don't think so.
Yeah. I mean, the taxable consequences would be up there. The other thing is, I think from a performance standpoint, she has an actively managed ETF. So it's not passive, it's active, which means that if you're not actively doing stuff to it, people will be like, why am I paying you money? You know, maybe that's another factor that's in there. So, because I mean, other than it, dude, if you're a passive innovation investor, you know, you don't buy and sell all the time. You just buy and you wait until the thesis comes true. You know,
but even on my end, a good portion of the purchase when I bought a little bit of Palantir was because I mean I was going and doing what I said I would do for AMIT, but another part of it is like it's just the sector at the price that it was, it's going to go up, at least in the short term. It's going to go up. It's kind of like your argument about the banks. This is not about like I think banks are the best stocks ever. It's like they've been beaten down. Money's starting to flow in. If you want to make some money in the next couple of months, this looks like a good place that you can do it, right?
Yeah, I think that's a key to look at. I think a lot of times we want to find these individual companies that are going to outperform the market, but then there's also times where you just have the entire sector rotating in and out of good times and bad times. So you could take a dart and just throw it at any company in that sector, like today, right? Like regional banks, the big banks, everyone in financials rallied like crazy. You could have took a dart, just throw it at a name, and you would have got at least a minimum of 5%.
Well, Chris, let me ask you. You said you bought banks this morning. Why are you buying the day they're rallying?
Well, I bought in the morning time. I still had a significant amount of banks before that. I just moved a lot of stuff out of my growthy tech stuff and into the banks.
Can you give us an example of some growth stuff you kind of sold off a little bit?
Duolingo. I sold a little bit of Duolingo off today, you know, because they've had a really good run. Right. Yeah. I sold a little bit of SMCI because that was another one of my really big winners, you know, over the last like 3-4 months. So the thing is for me, it's like, okay, I'm not going to be afraid to take some profits off the top and put it into a sector which is woefully undervalued. Like any company you look in the financial side, they were undervalued. So I bought a little bit more of Truist. I bought a little bit of KeyBank. You know, KeyBank is a little bit more speculative. But at the end of the day, they still have some good fundamentals behind it. I bought Zion Bank. Zion Bank has a huge presence in Utah, and they actually were formerly associated with like the Mormon Church of the Church of Latter-day Saints. Yeah, so they grew up out of that. So you know,
you're buying Jesus. You're buying Jesus.
Well, I wouldn't call it just Jesus. I'd say
he's like I'm investing in holy water.
Yeah, Chris, are you swing trading these banks, or are you holding for the long term?
I believe it or not, I'm holding for the long term until they revert back to their mean again, right?
Define long term.
Well, if they revert back to the mean in 6 months, that's a nice game.
And the thing with banks, though, remember, is that they pay dividends. Like, unlike other companies where if they revert back to the mean and you're just chilling it with them, that's it. You're just chilling. You're not really, you may not get as much capital appreciation. Like, look at Meta, right? Like, I love Meta to death. I still have a significant amount of money in Meta. I don't want to pay the taxable consequences for it. But at the end of the day, if it's flat, I don't get anything for Meta. On the other hand, if I have Truist and it goes flatline again, I'm still getting that nice quarterly dividend, right? So you have to also consider, like, hey, what kind of business am I investing in? What kind of returns do I passively get? Because eventually,
why wouldn't you consider like an AT&T or a Verizon?
Utilities
AT&T for a long time was a good one, and it's like it's like, what it's like when you play Monopoly, you want to be the guy owning B&O Railroad. You know what I mean?
No,
like, you want that. You want the electric company.
Agree.
You know what I mean? Like,
I totally agree with you. The only thing is, you will get a fixed return for a long period of time. So if you have a very flat market, then that's fine. Those are the companies that you want to have, especially for companies that during a recession, utilities do exceptionally well, because they're fixed businesses. Like, you can't just cut them off. Like, people are not going to say, you know what? So, but the difference is, you're not going to see a lot of capital appreciation also. Right?
You're right, but you also don't have the same risk of capital depreciation.
But I think that's Chris's point, is like the risk on these regionals is just so low because they don't deserve to be at this level. And that's, maybe he'll be right, maybe he's wrong, but
right. But we wouldn't be saying that maybe AT&T is going to go down, maybe not.
Right. That's fair.
Yeah, that's a good point.
And it could be that I'm a bit old school in that sense, but I'm just like,
no.
And real quick, Chris, I'm gonna have to let you finish, but at 14 minutes and 39 seconds for the third day in a row, we're holding good 3 days straight. $400.
Nice. I like how you pulled the I'm gonna let you finish. I was gonna say, do you guys know about the wrap it up?
For us, man. 400.
You guys know about the wrap it up box?
No.
Yeah, the one from Chappelle show. Chappelle show.
Oh, okay.
You got to pull that up at some point. It's hysterical. It's okay. On the award shows, when someone starts talking too long, they start playing the music. It's like letting them know, just get that. It's the wrap it up box, and it does that. We need an equivalent of that.
The only Chappelle show episode I saw was when the white supremacist was blind or something.
Oh yeah, that's a good one.
Clayton Bigsby.
The racial draft was one of the best episodes where they're fighting that, they were trying to get Tiger Woods. They couldn't tell if he was a white guy or a black guy.
Yeah, no, the best one was the Wu-Tang Clan with the Asians.
Oh, that was great. That one was good too. That's actually they were an investment firm. It was Wu-Tang. What was it? Wu-Tang?
Wu-Tang Financial.
Wu-Tang Financial. Yeah. And he's like, diversify your bonds.
Okay, so
he's like, we're about to go to war. Buy some atomic bombs.
Yo, it's just classic TV, man. Yeah. I miss that.
I got you to 400. Yay me. Thank you, Detred. We appreciate that one.
Detred.
Okay, Carlos, let me start with you. Nvidia at a Ford P of 64, $300 it crossed. Do you think the stock is would you sell the stock right now at 300, or do you still think?
I actually own Nvidia. I owned Nvidia for a while. I owned Nvidia and AMD for a while, but I could never have fathomed at the time that I was buying them what they would become. I just think that this is the picks and shovels of AI. Until the companies start to take and make the hardware in house, they're the game in town, man. You know what I mean?
Are they the game in town, or?
Well, I think it's like them and AMD. Who else is making the chips?
Yeah.
Who else is making the
chips? It's at 2021 high, guys. Well, 2021, it's at those highs right now.
Which is a scary high. No, to your point, that's a scary.
That's a
scary high. So I mean, look, if I was buying it, if I was buying this at whatever it was, just around 100, to Chris's point, take some profits off. No, it's going to continue to this is a company that will and should continue to perform at least for 5 years. It takes a long time to develop. Like, if you want to replace them if you want to bring this piece of the equation in-house as part of vertical integration, that's a lot of R&D and a lot of money you're going to have to spend.
So just a quick thing these guys, they do not make any GPU chips whatsoever. They don't make them, they design them. And that's the key, because all of that stuff is great IP that can't be replicated very easily. A lot of those things are very patented, everything else. But this is, I think, where we actually could see an opportunity with Intel. And let me explain why. Intel has got a giant subsidy from the government to build foundries in the US. And we all know what's going on with China, right? Mm-hmm. Intel Intel could end up benefiting from the AI race because they're the ones that could that end up making the manufacturing the chips for AMD and for NVIDIA after 2025. So I would say, look, we all know based on the crazy rise in the stock price with NVIDIA and of course even AMD to an extent, and that AI is a real thing. The question is now, what are going to be the secondary highs that we can profit off of, right? Like if you guys know, GPUs are going to go crazy, but at some point, TSMC is the risky play because China at any point can say, you know what, we're going to invade you. So what does that mean? That means that a lot of the AI companies or anyone doing work in AI, they're going to want to diversify their supply chain, saying, look, we will buy some NVIDIA chips that are coming from TSMC, but then there's also some chips that NVIDIA chips that we will buy from Intel because Intel is manufacturing them. You know,
I have TSMC it's in the dividend portfolio because they apparently they supply a lot of chips for Apple. And if
what did you think of Elon basically saying China is going to invade them no matter what? What do you think? Do you think he believes that? Or?
Wait, say invade.
So Elon was asked yesterday, China, would they invade Taiwan? And he basically said, you don't have to read between the lines to realize what they think about Taiwan, basically implying, yes, it's going to happen. What do you think would be the implications for Tesla and TSMC, right, Taiwan, if China does invade Taiwan? Or do you think it's so far out of the picture that that's just not going to happen?
I don't think anything's out of the picture after what happened with Russia. I think when they invaded, they expected a lot more pushback than they actually did. I'm saying Russia,
right?
You know, right. For Ukraine. I mean, we are basically fighting a proxy war with Russia by giving the Ukraine. But I think China does still have massive leverage over
everybody
and the American business, right? And so they can still, but the danger to them is that they don't really innovate anything. They don't really create anything. They copy. And so if you pull that manufacturing out, China can fall very quickly.